So let's begin with mock test paper CA Final Advanced Auditing Series 1. So in this, we are totally having, of course, 100 marks. So 30 marks is for MCQs. Each MCQ is having 2 marks weightage, 15 MCQs they'll give you. 90 marks descriptive paper and 20 marks is choice. Where in this descriptive, they'll give you 6 questions, where question number 1 is not considered for choice. It's compulsory question. It's called as out of remaining 5, any 4 you have to present. And these 5 questions put together 14 marks each. So total is 70 marks. Now inside this 14 marks each question, 3 questions will be given. 5, 5, 4. This is all, or 5, 4, 5 or 4, 5, 5. Whatever the combination. But 14 marks will be the weightage. I think same paper pattern will be resembled in the ultimate final exam also that you are going to write. So this is the MTP one for May 24 attempt related one. So paper, series 1. So straight away without any further discussion, directly we'll go with, the questions. So always read the instructions. The question paper comprises 2 parts, part 1 and part 2. Part 1 comprises case scenario based MCQs. Okay, completely case scenario based. Case scenarios, don't think that it's too lengthy also. Even normal MCQs are also, they'll give you some practical scenario. Based on that, you need to select the option. So that's why it's called case scenario. Nowadays, standard MCQs as such, they are not asking. Even earlier, we have standard MCQs where little discussion is there at the beginning, introduction. Part 2 comprises questions which require descriptive type. And you know what? In this particular MTP1, even in the MTP2 for May 24, I felt MCQs are quite easy. They're not that complicated. If at all you're really conceptually clear, especially on standards, engagement and quality control standards, audit report chapter, risk assessment chapter, audit strategy chapter in CA final, and review, specialized areas, assurance and related services. If at all you're very good in these chapters, conceptually very strong, you can answer these MCQs predominantly. Descriptive is what caught my attention. They tested the descriptive questions quite different. But I know, I should tell you, I have told in my revision classes everywhere clearly how a question can come, how a question can come. And all of these questions were covered in our revision class itself. So how different questions can come. Except I find some 15 marks, approximately some 3 questions only I found out of box. Like completely out of box thinking required for some 3 questions only in this entire MTP. But rest all other questions we discussed enough in our marathons. Okay, we discussed in marathon itself, revision class itself. I told you how this question can be tested. I even told you about how it has been tested in the past, all that. So that's it. So let's read. Part number 1, case scenario based MCQs, 2 marks each. So first MCQ. Rohita and Co, chartered accountants, mainly into stat audit and tax audit, has received an order in writing from central government. Okay, they got an order in respect of one of its client to carry out an investigation. Okay, so this firm has received a request from central government to do an investigation. Rohita and Co is contemplating getting assistance of an expert with respect to certain matters. Can Rohita and Co take the assistance of experts in pursuing the investigation? Choose the correct answer, reasoning from the below. So simple, she was asked to do investigation. So now what she is doing, in order to do the investigation, she wants to take some expert's assistance. So that is the main question. Can she take the assistance of the expert is the question. Look at the answers. Never come to conclusion immediately by first option itself. If at all you feel the first option itself is right, don't come into conclusion. Always read 4 questions. I will teach you all this. I will teach you. First one. The answer is, of course, they tell me when you are conducting investigation or forensic accounting or whatever due diligence, you can take help of experts. There is no hard and fast rule here that you should take, you should not take, nothing. It depends upon the person who is conducting this due diligence, investigation, forensic audit. Getting it? So yes, obviously, Rohita and Co should consider whether the assistance of other experts like engineers, lawyers, etc. is necessary in the interest of comprehensive and foolproof examination of documents. Yes, she must consider whether an expert is required or not. She should consider. If at all she decided okay, not required, then okay. But she should think, right? First, is expert involvement necessary or not? She must consider, right? Next, yes, SEA 620 using the work of an expert has a specific paragraph on using expert. No, this is SEA 620 is in the context of audit of complete set of financial statements audit of complete set of financials. In that context only 620. It is not applicable for investigation. Remember, investigation generally comes under agreed upon procedure. It comes under agreed upon procedure. Is generally a 4,400 engagement. It's not audit engagement. No, the objective of 620 is usually only for all, I think it's not. So the answer no means is obviously not. It's not. Both of them are not straight away correct. So she can definitely use. So A and B both are saying yes, yes. But which is more accurate? A is more accurate. So my answer is A. So at the right side, you take a note. A. Next, in MCQs, no, it's not how many MCQs you solve. Understanding how they are testing the concept, whatever you learned. If you understand how they are twisting, how they are testing, the way you are revising the subject will change. The way you are observing the points when you are revising or reading the subject will change. And the pulse of the MCQs. It's not 1000 MCQs to solve 1500 MCQs. No, there is no. I think you might have solved many MCQ books, right? You might have definitely gone through some MCQ books and all. It would have not been there. Like this MCQs and all, you would have not been found. That's the difference. Getting it? So no matter how many you practice, but you will still feel different altogether when institute is testing MCQs, because institute MCQs are very qualitative. Now next, during the audit of a bank, Good Bank Limited, the auditors and management had a differences of opinion as to amount and the items which needs to be disclosed under head contingent liabilities. However, apart from that, okay, so they have some differences of opinion regarding disclosures under contingent liabilities. Some difference of opinion is there, okay. Apart from that, in addition to that, the auditors have observed the following. What they have observed? 79 agricultural loan accounts. 79 loan accounts guaranteed by Government of Delhi. State government guaranteed advances. State government guaranteed advances amounting to 26 lakh. Remember, it's not each month. All 79 loan put together 26 lakh is the outstanding, overdue for more than 2 years. Generally, agricultural loan means whether it's a NPA or not, it depends upon crop season. But here that end of they didn't tell. Directly they said overdue for more than 2 years. They used the word overdue already straight away. Overdue means what? It's already an NPA. Due date is already crossed. So they straight away said it is overdue. Here the important observation is they were already overdue. For how many years they were overdue is not required. It's not necessary for us. Generally, fine. Look at 93. Guaranteed by Government of India. This is central government guaranteed advances. If at all you are reading bank audit chapter, inside that audit of assets and audit of liabilities, they have given a big some 4 or 5 pages discussion is there. In that audit of assets, central government guaranteed advances. Central government guaranteed advances. Okay, let's look at the statement and then let's interpret. 93 agricultural loan accounts amounting to 32 lakhs were overdue for more than 2 years. So all 93 loans put together, total amount is 32 lakhs. Overdue for more than. So technically speaking, it's an NPA. But if an agricultural advance is, if an advance is guaranteed by central government, it's called a central government guaranteed advance. If it's a central government guaranteed advance, NPA provisions will not apply. We don't classify this as NPA. But on this amount, no interest amount is there. No, that we will stop recognizing. For interest recognition purpose, it is NPA. But asset classification purpose, it is still a standard set. So 32 lakhs is not an NPA. I'm just telling you, it's not an NPA. Fine, next. 6 corporate loans accounts. Guaranteed 3 each by Government of India and Government of Delhi. Okay, so 3 are central government guaranteed advances, 3 are state government guaranteed advances. Amounting to 29 lakhs for each company. Okay. 3 into 29, 3 into 29. So let's look at this. 3 into 29, how much it is? Okay. 87 lakhs state government guaranteed advance, 87 lakhs central government guaranteed advance. Okay. Were overdue for more than 3.5 months. I told you, once they were overdue, and especially, by the way, overdue for more than 3.5 months means overdue for more than 90 days, obviously. Overdue for more than 90 days. If at all, here some students might not observe this. 3.5 months is a very important time because it's overdue for more than 90 days. Fine. So if a government guaranteed advance is overdue for more than 90 days, if it is state government guaranteed, we don't consider the guarantee, we will classify it as NPA. So 87 lakhs state government guaranteed advance NPA. For a central government advance, not an NPA. Okay, 87 NPA. Fine. What is the question actually they're asking? What is the total amount of loan that should be classified as NPA by good bank? So total amount of loan, how much NPA they should show. So in the third point, corporate loans 87. This 32 lakhs is not an NPA. Whereas here, guaranteed by government of Delhi, 26 lakhs. Totally 113. Totally 113. The answer is C, straight away. It's very simple, C. Next, since I am explaining you, it is taking time. Otherwise, hardly 1.5-2 minutes only. It's hardly, see, for you can spend 1.5 minute on this question and finish it off. Next, third one. Sam Limited appointed Messrs. Ajit and Co. Chartered Accountants as stat auditor. The statutory auditor found the internal audit function was reliable and effective. So stat auditor assigned the task of assessing the inventory levels of a few branches where stat auditor believed that there might be some risk of material misstatement there might be some risk of material misstatement. To whom he allotted? To one of the internal auditor, Mr. Krishna. Getting it? So he is a stat auditor. He felt internal audit function is reliable and he want to allot inventory levels of few branches to internal auditor. And you see here, he felt there is some risk of MMS. We have seen using the work of internal auditor type 1, using the work performed by internal auditor or direct assistance, whatever it is. If at all risk of MMS is high in a particular area, we should not allocate the work to internal auditor. That we have seen already when we are discussing SA 610. Then, since the internal auditor had recently done such assessment as a part of their internal audit program, therefore stat auditor believed that they could rely on farmer's report. Beside this, because of the paucity of time, stat auditor, fine. So he want to allocate internal auditor, but later he got to know that he already worked on it. His report is ready. So he want to just check the report. But remember, whether you're asking to work on inventory or whether you are using their report on the inventory verification. Getting it? Whatever it is, you felt risk of MMS is high in inventory rate, you should not use his work. Fine. Besides, because of the paucity, means scarcity, insufficient time, stat auditors also requested Krishna to help them in some working paper, including audit documentation. Okay, so audit documentation related work they're asking. Technically, audit documentation is property. It's not about property, sorry. Audit documentation is responsibility of the auditor and engagement team. How come you delegate your documentation works to internal auditor? You should not delegate. Fine. Before the audit was concluded, Krishna got promoted and shifted to another city. During the audit discussion stage, the lead statutory auditor found out that the documentation delegated to Krishna was not complete. Accordingly, stat auditor further checked the inventory work delegated to the internal auditor. However, it was found to be satisfactory. Okay, so inventory work, whatever delegated to him, he felt it is satisfactory, but documentation work alone, he could not complete and he left to some other organization. So he has promoted. Okay, he has shifted to another city. Now, in view of the above case scenario, state which of the following statements hold true. What is the true statement they're asking? Just a minute. Yes. So look at the options. I think we analyzed it. Look at this. The working of internal audit function was reliable and satisfactory. Therefore, allocation of inventory work. No, wrong. It's not wrong. It's not correct. The documentation will be considered as complete as far as stat auditor's responsibility is concerned, as missing documentation was because of the oversight. No, first of all, documentation is your responsibility completely. Since the internal auditor has conducted the similar inventory level checking activity, therefore, because of familiarity with the audit of stat, no, that's wrong. Because we assessed, we have seen in the following circumstances, the work can be delegated to internal auditor. One, the level of risk assessment is low, and competence, internal auditor is having sufficient competency, and he is having sufficient independence, all that. In all these cases, you can delegate. If at all the risk is high, we should not delegate the work. The stat auditor should not have delegated the inventory level checking to the internal auditor, as the risk assessed was material. This is very, very apt answer. Wherever the risk is involved, we should perform the work directly. Using the work of internal auditor, there is one concept. The stat auditor, the external auditor, must use less of the work of internal auditor and perform more of the work directly. In an area where risk of MMS is high, there is exact sentence. So that is what they tested here. That's it. And further, documentation or property of the stat auditor and responsibility of stat auditor. So he should maintain confidentiality during all stages of audit. Therefore, it was wrong on the part of stat auditor to hand over the documentation arrangement work to the internal auditor. It's not correct at all. Documentation is completely your responsibility. Getting it? It's your own property. You should maintain confidentiality. You should not disclose to others. All that. Next, case scenarios. Case scenarios. 4 to 6 marks weightage. ABC Limited is a public company listed on National Stock Exchange, okay, having its registered office in Delhi. Just a minute. Yeah, it's okay. Delhi. The company is primarily engaged in manufacturing of pharma products. During the previous financial year, the company recorded a remarkable turnover of 5,000 crores, accompanied by a profit of 800 crores. The company had even a secured loan facility from State Bank of India, 1,000 crore. PKR & Co., a firm of chartered accountants based in Delhi, has been appointed as joint auditor along with PK & Co. XYZ. So 3 joint auditors, PQR, XYZ, PK, totally 3 joint auditors. An esteemed chartered accountants firm in the same location, Delhi. ABC Limited has already completed the appointment related formalities, as well as they have also signed engagement letters. They are resting on joint audit. The engagement letter contains details on the objective and scope of the audit, responsibilities of auditor, management and identification of framework applicable. Moreover, while planning the audit, joint auditors have divided the responsibility for conducting audit as per SA 299. Very good. Further, the audit team has established 50 crore as materiality threshold calculated at 1% of turnover. Okay, good. So now during the audit, PK & Co. came to know that one of the employees of the company had involved in fraud amounting to 201 lakh. Okay, so one of the employee has committed a fraud for more than 2 crores. It's more than 1 crore. He discovered that. So maybe reporting to central government and all might apply. Fine. Let's not interpret much. Let's look at the question and then interpret. But when you're reading case study, try to remember the facts. You need not remember. You read carefully the case study, naturally you remember. Additionally, as a part of audit procedure, the auditor had also sent a confirmation request to 100 suppliers to confirm the year-end outstanding balances. External confirmation. The said requests were designed in such a way that the supplier will directly respond to the auditor, indicating that the supplier agree or disagree. It's a positive confirmation request because either agree or disagree, both they will reply. However, in this regard, confirmation responses were received only from 37 suppliers. Okay, we sent it to 100, but we only received 37. Fine. Moreover, as a part of audit procedures, auditors of ABC Limited also wants external confirmation from 37 debtors. Here it is suppliers, creditors. Now the auditors also want to get confirmation from debtors to confirm the year-end balance. However, in this process, the management refuses auditors to allow to send confirmation, and after asking the reason for the refusal, auditor came to conclusion that the refusal is unreasonable and auditor is unable to obtain relevant and reliable evidence from alternative. You are unable to obtain relevant and reliable evidence. Management refusal and unreasonable. 505. You need to modify the opinion as per 705. You need to give a modified opinion. In addition, while forming an opinion, PQR & Co. had a different opinion on the valuation of inventories. Okay, one of the auditors have a different opinion on valuation of inventory, but PK & Co. XYZ have same opinion, and accordingly, given their majority stance, both PK and XYZ assert that PQR must also endorse a common audit report along with their opinion. PQR & Co. has a different opinion on inventory, but remaining 2 audit firms have the same opinion, and both of them are saying that since majority prevails, you also have to join with the same audit report and give a common audit report. No, SA 299 gives a permission. If a joint auditor is not bound by majority. If a joint auditor disagree with remaining joint auditors, that disagreeing auditor can give a separate audit report and separate opinion, yes or no. And in that report, you should give cross reference to the other joint auditor report in the other matter paragraph. Other remaining joint auditors, whatever report they are giving in their other matter paragraph, they should give cross reference. Apart from this, so lengthy case study, XY Private Limited, an associate enterprise of ABC. Okay, we 3 auditors know of ABC. ABC has another associate, that is XY Private Limited. The company XY Limited appointed JDMR & Co., another firm of chartered accountants located in Rajasthan, as stat auditor of XY Private Limited for the first time for the current financial year. Okay, so for JDMR & Co., XY audit is initial audit engagement. Fine, let's see. The financial statements of XY Private Limited was audited by its predecessor auditor in the previous year. During the audit of current year, JDMR & Co. came across a material misstatement in the opening balance that affect current year financial statement. In this regard, the auditor discusses the said facts with the management. However, Management does not accurately pay attention to the same and does not either adequately account or disclose the present in the same. Okay, so prior period misstatements you identified, opening balance misstatements you identified, which is a prior period item. When this auditor informed the XY Private Limited regarding this, company did not pay any attention, which means they did not modify the financial statements to rectify the material misstatement. So current audit, this auditor, new auditor, ZMR & Co. should give a modified opinion as per 501. That's it. The other important financial information of XY Private Limited. Okay, so for XY, they have given some information. Paid up capital, credit balance in P&L account, turnover, okay, borrowings from banks and FI. They just gave this information. We'll see below. They just gave the numbers. Don't interpret any numbers right now. Based on the questions, let's discuss. Now you see, for question number 4 to question number 6, 3 questions were asked. So 4 to 6, sorry, I said 4 to 6 marks, right? Actually, sorry, it's not 4 to 6 marks, sorry, I'm correcting it. It's actually question number MCQ, question number 4 to question number 6. That's what the meaning. So 3 questions into 2. On the basis of the above, you are required to answer the following. In the above given case, what should be the next course of action on the part of the auditors of ABC when the auditors concluded that reason of the management refusal to allow the same confirmation to debtors is unreasonable and auditor is unable to obtain evidence? When the management refusal is unreasonable, you have to perform alternative procedure. But if alternative procedures is also not possible, you should modify your opinion. And look at the answer. Auditor should have included the reason for refusal by management and the fact of inability to obtain the key audit matter. Wrong. Key audit matter is not a substitute for modified opinion. Auditor should have included the reason for refusal by management in written representation. No. Auditor shall communicate the matter with TCWG and also determine the implications for audit and audit's opinion in accordance with 705. Yes, it is correct. We'll see the last one also. Auditor should have included the reasons for refusal by management and the fact of inability. Emphasis of matter paragraph. No. So the answer is C. Of course, management refused, no. So first you have to communicate to those charged with the governance that management is refused. If those charged with the governance again involved or interfered and resolve the situation, you just proceed with the audit, get the evidence, done. If at all they are unable to resolve, then finally you will give a modified opinion. So the option is C. Next, 5th question. Whether PQR & Co. should adhere to the opinion formulated PK and XYZ. These 3 are joint auditors. Remaining 2 are saying majority. Majority's opinion only will prevail. No. Explore alternative options. PQR & Co. will have to go with the opinion framework. No. PQR has the option to incorporate a distinct audit opinion paragraph within the common audit report. Wrong. In the same audit report, no. One audit report will have only one opinion paragraph. What are they saying here? In the same audit report, give 2 opinion paragraphs. No, that is not permitted. PQR & Co. can align with the opinion formed by majority. However, any dissenting viewpoint should be prominently highlighted. No. You want to give a modified opinion. It's not emphasizing. PQR & Co. has the discretion to issue a distinct audit report independently. In such a scenario, the reference to other joint audit report issued by majority should be noted within the other matter paragraph. Absolutely. The answer is D. Yes or no? In the above given case, what should be the course of action on the part of ZMR & Co.? What should be the course of action on the part of ZMR & Co. when they found a material misstatement which have not been accounted or presented or disclosed in the financial statements of the current period? Opening balance, material misstatement not recorded in the current year. Modify the financial statements of the current year also. ZMR should not pay attention to the MMS found in opening balance since they have not the auditors. Wrong. ZMR & Co. should express a qualified opinion or adverse opinion as appropriate. Yes, it is correct. But let's see, is there any other better option? ZMR & Co. should take such matter in the written representation received and no need to report the fact in the audit report. That's wrong. ZMR & Co. should disclose such fact in emphasis of no. When there is a material misstatement in the financial statement because of the opening balance misstatement, you must modify the opinion in the current audit report. Emphasis of matter paragraph is not a substitute for modified opinion. So the answer is B. I hope you are not feeling fast because 30 marks MCQs we must finish. See, actually 30 marks multiplied by 1.8 minute. So 54 minutes, maximum within 54 minutes, we should solve all the MCQs. Already 23 minutes done. Next, I'm explaining you, by the way, I'm just reading. See, in exam, no, you don't require explanation, right? You read and you process it, right? So until now, we solved hardly for how many? 6. So 6 into 1.8, 6 into 1.8, technically speaking, we should have finished this in 11 minutes. But we already came to 24 because of the explanation part. Fine. Some 5 minutes and all take off. I think we are in the right pace. Let's look at the case scenario 2, MCQ 7 to MCQ number 10. M&N Associates, a firm of chartered accountants having CIM and CIN as partners, is based in Mumbai. M&N Associates are appointed to conduct stat audit of Jink Limited. Zinc Limited is required to appoint an internal auditor as per statutory provisions given in the Companies Act 2013 and appointed CAIA. IA refers to internal auditor probably, so they use the same shortcut as its internal auditor. M and Associates asked IA to provide direct assistance to him regarding evaluating significant accounting estimates by management and assessing risk of MMS. Wrong. There are some areas where direct assistance cannot be used. Areas involving significant transactions or events or significant judgments or assumptions involved, areas of work which already performed, for performing procedures under 610, that work also you should not delegate to internal auditor. So these 4 points were there specifically prohibiting the external auditor not to use. There are some works which external auditor shall not use. So significant assumption you should not use. He also seeks his direct assistance in assembling the information necessary to resolve exceptions in confirmation response to external confirmation. So external confirmation procedure we received all the confirmations, but the confirmation replies what we received, what is the number balance in our books of accounts, both are not matching. Exceptions were there. Exceptions means what? Confirmation response, what is there in your books of accounts or what you requested, both are not matching. That's called exception. There is a definition for exception in 505. Getting it? So to resolve this exception, some additional work has to be done. For that also he is asking direct assistance. I think that can be done. CAM accepted his appointment as tax auditor of a firm under 44AB of the Income Tax Act and communicated tax audit within 2 days of the appointment, since the client was in hurry to file the return of income before the due date. After commencing the audit, now the CA realized his mistake of accepting the tax audit without sending communication to the previous tax auditor, clause number 8 violation. In order to rectify his mistake, before signing the report, he sent a registered post to the previous auditor and obtained post and acknowledgement. Wrong. You must communicate to the previous auditor and obtain NOC before accepting the appointment, not before even starting the work, before delivering the work. Before accepting itself, you should do that. Then CAN, another auditor, I think MN and Co, right? 2 partners. So another partner provides management consultancy and other services to its client. Okay. CAN was also awarded Best Speaker of the Year as a gratitude from the ICI itself. Later on, CAN posted his frame photograph on his website. Array, website guidelines are there. How can you post all these achievements and all? You cannot post. Clause number 6 violation. Yes or no? Any means, circular advertisement bar, any other means is not permitted. You should not advertise in any other means. Yeah, under clause number 6 only website guidelines were issued. As per website, you have violated website guidelines, which means you have violated clause number 6 guidelines, wherein he was receiving the said award from the institute. Okay, so website guidelines were violated. Upon hearing about efficient services provided by M&A and associate accountants, okay, another issue. They were approached by XYZ Cooperative Society to act as their stat auditor for upcoming financial year. Okay, so Cooperative Society is appointing them. The firm agreed to offer and had the following opinions in mind with respect to fees. Okay, from society, how much fees they need to charge? To charge as a percentage of net profit or 501 rupee. You know, either any of this they can go for. Generally, we have a clause which says that a CA cannot accept fees as a percentage of revenue. I think clause number 10, I think so. Getting it? As a percentage of revenue, we should not accept. But there are exceptions. Registered valuer for valuation services, liquidator, for auditors of a cooperative society can accept fees as a percentage of profit. A cooperative society auditors also can accept that only. So any of this is permitted. Either they can charge some fixed amount or they can charge as a percentage of fee. Both are permitted. Only when you are auditor of a cooperative society. Based on the above mentioned fact, you are required to answer the following MCQs. Okay. With respect to fees to be charged for new assignment, which option can be opted by MN and associates? 1, to charge as a percentage of profit or 501. Only 1 is permitted, only 2 is permitted, either 1 or 2, neither 1 or 2. Either, any of this you can go for. Getting it? C, option C. M and associates sought direct assistance from internal auditor, right? And internal auditor has stated in the above scenario, okay, advice as to whether he is permitted to do so in accordance with relevant standards on auditing. Here he is asking direct assistance in a significant assumptions and estimates. That is not permitted. However, he can take direct assistance related to exceptions resolution, resolving exceptions for external confirmation. That he can use. CA internal auditor, the internal auditor cannot assist MN in assembling information necessary to resolve. No, that's wrong. There he can use. However, he can use for significant accounting estimate. That's wrong. M and associate cannot ask internal auditor for direct assistance regarding evaluating significant accounting estimates and assessing the risk of MS. Of course, correct. However, the internal auditor may assist MN in assembling the information necessary to resolve the exceptions. Yes, the answer is B. But wait, don't conclude. Don't bubble the answer. M and associates Cannot ask IA for direct assist regarding significant account estimates and assessing the risk of MS and in assembling. Both you should not ask. That's wrong. M&A associates can ask for direct assistance. Wrong. So the answer is B. The answer is B. I just want to see whether any better answer is given than B. So you cannot ask for significant accounting estimates, assumptions, and all direct assistance. But for resolving exceptions related to external confirmation, you can do. But remember, here I just want to tell you one out of box point. Suppose, can you ask internal auditor to directly select to the parties to whom external confirmation to be sent? No. The external auditor shall maintain control over external confirmation procedure. SA 505. You should not delegate that work of entire external confirmation process to internal auditor. You should maintain control. You should do directly. After getting confirmation, if there are some differences, account statements of external party and our company statement of accounts we cross with, that work you can do. This is a clerical work that you can do. So B. As per Chartered Accountants Act 1949, under which clause CAN is liable for misconduct? N means what? What misconduct he did? N manage website related. Okay, CAN, no, he is guilty of website related. So clause number 6 directly. So 987, clause number 6. Sometimes no, they'll give you another answer with clause number 6 only, but they'll use second schedule. So be careful. So clause number 6 of part 1 of first schedule. Yes, absolutely. So B. Before signing the tax audit report, CAM send a registered post to the previous auditor and get acknowledgement. Will CAM be held guilty of misconduct? Obviously, yes, he is held guilty. So look at the answer. M will not be held guilty. Wrong. M will be held guilty of professional misconduct since he has accepted the tax audit without first communicating. Exactly. The answer is B. Let us see here. Not be guilty. That's wrong answer. Will be guilty without first communicate. He has accepted the tax audit. Oh, sorry. Here, two clauses were there, B and C. Actually, here, the clause number 8 of part 1 of first schedule. Here it is saying part 1 of second schedule. It's not second schedule, it's first schedule only. Yes or no? So you see, just now I told you that kind of question can come. So B, C, both are talking about correct answer, but only here number alone different. It's first schedule. Be careful. The answer is B. Case number 11 to 15. 11 to 15. Hey, I think we are efficient actually. We are efficient. We have covered 10 marks, 10 MCQs into 2. 20 marks MCQs we have covered into 1.8 minute for each. 36 minutes. Hey, we are much faster than the ICI. So introduction is given, explanation is given in spite of it. So we are very quick. Next. Sun Chemicals Limited, a prominent player in India's industrial landscape, has been etching its mark from its inception in 2008, headquartered in bustling city of Pune, that is Maharashtra. Okay, listed on BSE and NSE, and the company has steadily grown into multifaceted entity catering to diverse industrial needs. Okay, no useful information in this, just that it's a listed entity. That's all we know. Sun Chemicals' core strength lies in its robust manufacturing capabilities spread across multiple state-of-art facilities. The company produces a wide range of industrial chemicals, including specialty chemicals, performance chemicals, basic chemicals. These products find application in various sectors from pharmaceutical, textile to paints, coating, construction, agriculture. About the company they're giving. So the company is diverse. The company is having a diverse, they have diverse customers, can manufacturing chemicals. It's a listed entity. From here, the story starts. RKM & Co., a chartered accountants firm, was appointed to conduct the stat audit for financial year 23-24 for the company. Mr. Rahul Dubey was engagement partner for the said assignment. In the organizational structure, Mr. Rahul noticed that those charged with governance in the company are also involved in management. Oh, TCWG is equal to management. There is no separate, which means same management people are same, top management also same. So, which means if any matter, if at all you communicated to management in this company, no need to specifically once again communicate to TCWG because both are same. Remember, during an ongoing engagement of the audit, at the end of the third quarter during the tenure, already 2 limited review reports were issued by RKM & Co. The management of the company imposed a limitation on the scope of the audit that Mr. Rahul considered likely to result in need to express a qualified opinion or disclaim the opinion on the financials. So already 2 limited review reports were issued. Okay, fine. And accordingly, he requested that management to remove the limitation, but management refused to remove the limitation. Suppose if management imposed a limitation, and in spite of request from the auditor to remove the limitation, if management did not remove the limitation, withdraw from the engagement. It's compulsory. 705 says if management imposes limitation, withdraw where legally permitted. Suppose if legally immediate withdrawal is not permitted, look at this is a listed entity. When he is withdrawing, the date is very important. 45 days, all that logic you remember. In SA 240 standard, I explained you. In SA 240 standard, when I'm explaining you in our class, so I told you, I directly opened audit report chapter in the ICA material. Inside that LODR regulation, 45 days logic, that logic only. Fine, anyhow, we'll see. They have not given any information about dates in the question itself. After following the due procedures applicable in circumstance, finally Mr. Rahul with the engagement team derived on a conclusion that possible effect on the financials of undetected misstatements could be material and pervasive, so that a qualified opinion would not be adequate to communicate the gravity of the situation, and accordingly he proposes to withdraw from the engagement after consulting with senior partners of the firm on 15th November 2023. 15th November 2023 is after 45 days. Is after 40. Okay, sorry. He is already given limited review. It is after 45 days. It is after 45 days from second quarter. Second quarter is for when it ended September 30. 45 days means what? 14th November is the 45th day. October 31 days. November 14 days. Remember the days. Very clever. 15th November means it is not 45 days within second quarter ending. It is after 45 days. If you want to resign after 45 days, what is the rule? If you want to resign after 45 days from the end of the quarter, for that quarter limited review report should be issued, and for the next quarter also limited review report should be issued. Here he already issued 2 quarters review reports. 15th November means after 45 days from the end of second quarter, so he should issue third quarter review report also. And if an auditor who has issued 3 quarters review report should also issue 4th quarter review report, should also issue annual audit report, then only he can resign. Correct? LODR regulation. In this resignation letter, the firm mentioned professional preoccupation as a resignation, professional preoccupation as a reason. If you remember, in case of unlisted entities, ICA has given a very clear-cut guidelines that in case of audit of unlisted entity, in the resignation letter, professional preoccupation shall not be mentioned. You should clearly tell what is the reason. You should not mention that I am already having some other works, that's why I am resigning. No, it's not just for unlisted, but even for listed entities, the same rule applies. So fine, we understood the entire story. Let's look at the question. What was the responsibility of Rahul when management refused to remove the said limitation? If management imposes a limitation and it results in inability to obtain sufficient appropriate evidence, which is material but not pervasive, qualified opinion review. If it is material and pervasive, withdraw from the engagement if permitted. If withdrawal is not permitted, give a disclaimer of opinion. In such a case, where you are supposed to do audit report and then withdraw ultimately. That is the scenario. What you should do? I have to compulsorily give audit report before withdrawal. So give a disclaimer of opinion and then withdraw. Fine. So to determine whether it is possible to perform alternative procedures, okay. No. Management refuses to remove the limitation. To communicate the matter to those charged with governance and determine whether it is possible to perform alternative procedures. Here, top management itself is management. Getting it. So, okay, let us see all the 4 options. We'll see. To determine whether it is possible to perform alternative procedures. Generally, when management imposes limitation, we ask them to remove. If they don't remove, we try to perform alternative procedures and try to get the evidence. If at all, ultimately we are not getting evidence. Inability to obtain evidence. Material but not pervasive, we give qualified opinion. Material and pervasive, we withdraw from the engagement. If withdrawal is not possible, audit report must be given. Disclaimer of opinion we give. Yes or no? To communicate the matter to TCWG and determine whether it is possible to perform alternative procedure. Actually, this answer is very much correct. But in this question, you communicated already the difficulty to management, and management itself imposes the limitation. And we know that management itself is those charged with governance. When management itself is those charged with governance, why should I once again communicate to TCWG? Not required. When both are same, directly perform alternative procedures. Is it possible or not? You should check. Then we'll see. To determine whether it is possible to perform additional procedures, here evidence is not available. Management is putting limitation. You are unable to do some work. It's not about additional work. Basic work itself we are unable to do. So alternative is a right word. Request for written representation. That limitation, no, that's not correct. So the answer is A. Actually, this question is very tricky, very logical. Here they have given an indication in the main question itself. The top management of the company itself is involved in the affairs of the company. They both are same, one and same. So wherever, in whatever the standard, wherever situation comes, you have to communicate with TCWG. No need to do, because management itself is TCWG. So if you have already communicated with management, there is no separate requirement for you to communicate with the TCWG again, because both are one and same. So the answer is A. The answer is A. If at all you didn't understand, once again, replay the past 5 minutes. What was the responsibility of RKM & Co. with respect to issue of limited review report at the time of resignation? 15th November you're resigning. 15th November is 46th day from 30th September. If at all an auditor want to resign after 45 days from the end of a particular quarter, for that quarter and for the next quarter also you must give review. So for 30th September you must give review report. For quarter 3 also you must give review report. And in the LODR guidelines it clearly says an auditor who gave limited review report for 3 quarters must issue review report for 4th quarter, must issue annual audit report also, and then only resign. And now you see, limited review report for 3rd quarter was required to be issued. Of course, it is correct. We'll see. No further review report was required. No, wrong. Limited review report for 3rd quarter was required to be issued, and consequently, after its issue, the audit report for full year is also to be issued. Limited review report for 3rd quarter was required to be issued subject to terms of audit engagement. That's wrong. It's not subject to. You must issue LODR regulation. The answer is C. So 12th question, the answer is C. Whether in the given circumstance, withdrawal from engagement was mandatory. Is it mandatory to withdraw? Obviously. If so, what is the responsibility of auditor with respect to the withdrawal? If you recollect 705, inability to obtain sufficient appropriate evidence, below that, we have clearly explained. If you read, whether you are reading our book 705 or whether you are reading some other book also, you just open and see. If auditor has encountered an exceptional circumstance where he is unable to obtain sufficient appropriate evidence because management imposed a limitation, first request the management to remove the limitation. Perform alternative audit procedures. If auditor, even after performing alternative or unable to perform alternative and unable to obtain sufficient appropriate evidence, if at all the possible effect is going to be material but not pervasive, give a qualified opinion. If it is going to be material and pervasive, withdraw from the engagement where it is legally permitted. Here it is legally permitted. Just that you have to give limited review report for quarter 3 and annual audit report, and then you withdraw. After giving audit report, you can withdraw. But withdrawal is compulsory. That's what 705 says. You have to withdraw. Now you see. In the given circumstance, withdrawal from engagement was not mandatory. That's wrong. 705 clearly says you must withdraw when you are unable to obtain sufficient appropriate evidence because management imposes limitation and the possible effect is going to be material and pervasive. In the given circumstance, withdrawal from engagement was mandatory, and in case of withdrawal, and by the way, you withdraw and whatever mistakes you found, whatever material misstatements you identified, up to date of withdrawal, communicate with the top management, those charged with governance, and then withdraw. Give a letter them, what are all the mistakes you identified, and then withdraw. Communicate misstatements identified. You see 705, that was the last point. In the given circumstance, withdrawal from engagement was mandatory, and in case of withdrawal, as withdrawal is from the audit before issuing audit report was not practicable or possible, he was required to disclaim the opinion. Obviously, you have to withdraw mandatorily, but before giving audit report, withdrawal is not possible because it's a listed company, LODR regulation apply. Since you have to give audit report before withdrawing, you don't have evidence. What will you do? He has to give disclaimer of opinion. The answer is B. B, I feel right, but we'll see. Don't conclude. C and D also will see. In the given case, withdrawal from engagement is mandatory, and worse, in case of withdrawal, the auditor is required to withdraw from the audit where practicable and possible under the law. This is correct only, but I feel this is even more accurate because LODR regulation apply. You have to give audit report because you are the one who gave 3 quarters review report. Audit report also you have to give. Before withdrawal, you have to give audit report, right? Since audit report has to be given, evidence is not available, possible effect is going to be material and pervasive, you must give a disclaimer of opinion. This answer is more clear than this answer. Actually, B, C, both are right, but B is more accurate, more complete. It is not wrong answer, but this is right answer. Getting it? In the given case, withdrawal from engagement was not mandatory. That's wrong. So the answer is B. So 13th question, the answer is B. Then 14th question. Assuming Sun Chemical Limited is an unlisted company, whether the reason for resignation was proper. Assuming it's an unlisted company, whether the reason for resignation was proper. No. For an unlisted company also, the ICA has clearly given guidelines in LODR regulations. That LODR point is in ICA material audit report chapter. LODR point is there. Below that, one box is given. Inside that, they clearly mention an auditor of an unlisted entity cannot give a reason as preoccupied professional works at the time of resignation. No. Whether the reason is correct? No. Here saying yes, they are saying again here also no. So 2 no's were there only. The auditor should have clearly mentioned the reasons for the resignation letter. Okay. No, the reason should have been little lengthier, and further the exact reason must be provided to the new auditor to be appointed. No, that's not correct. Yeah, it is reason for resignation we give to the company, not for the new auditor purpose. We give reason to company, not for the new auditor purpose. Issued to the company. So the answer is A. assuming that auditor proposes to resign on 14th November before the issue of limited review for second quarter. Oh, 14th November means within 45 days from the end of the quarter if you want to resign. Just give review report for that quarter. Next quarter not required. So limited review report for second quarter if you give, resign. That's enough. Then what was the responsibility with respect to withdrawal from the engagement and issue limited review report? Very simple. The auditor shall communicate with those charged with the governance matters regarding misstatements identified during the audit that would have given rise to modification of the opinion and limited review report for second quarter and third quarter. Third quarter not required, because you're resigning within 45 days. You just have to give limited review report for that quarter and then resign. But before withdrawal, whatever mistakes you identified, communicate it. So here third quarter is included, so that option is not correct. The auditor shall communicate to TCWG the matters regarding misstatements identified during the audit that would have given rise to modification of the opinion, and the limited review report for second quarter was also to be issued. So the answer is B, straight away. C also will see. The auditor shall communicate management and those charged with governance matters regarding misstatements identified that would have given rise to modification of the opinion and limited review report not required. That's wrong. The auditor should communicate to those charged with governance the possible effect on the financials of undetected, that and all not required, because you didn't get evidence itself. Possible effect and all you can't even identify. Undetected misstatements and all you can't. That's not. Whatever mistakes you identified, that only you should communicate. Open 705, you will find exact sentence in our book. I think 15 MCQs, 30 marks we have completed within 46 minutes. Actually 3 hours means 180 minutes divided by 100 marks is equal to 1.8 minutes for each mark. For 30 marks we have completed. 54 minutes is the time, but we have completed within 46 minutes. That to explanation, introduction, all that is covered. So technically speaking, another 5-10 minutes before itself we would have completed. 10 minutes we could have saved. If at all this explanation and all is not there, you could have completed this paper if at all you are very strong in concepts within that. But anyhow, nevertheless, you can take 1 hour time for 30 marks MCQs. That's always better. Be cool, read thoroughly, take a clear decision. That's it. Just a minute. So that's it. MCQs are completed. You please cross check the answers later on. So there is a key here which is available. You just cross check the answers. Mostly I pick the right answers only. So next up, we'll proceed with the descriptive questions. I felt descriptive questions are very challenging, like many out of box questions. Approximately 15 to 20 marks were out of box questions. We'll see. While conducting stat audit of Tasty Foods Limited, CA Careful has planned attendance at physical inventory count of the company from 29th March to 31st March. The company is engaged in business of extracting rice from the paddy grains and caters to domestic as well as international market, particularly in Gulf region. It has its plant spread in area of 20 acres located in National Capital Region. Paddy contained in jute bags of nearly standard size and purchased from dealers or agents. So paddy is purchased from dealers and agents which are in bags, jute bags. It is stored in heaps on a pallet, a kind of wooden structure in open area covered by a protective sheets and in steel silos. Steel silos means generally, steel containers. Big containers will be there, heavy containers. Silos are huge steel containers with measuring strain gauges. Strain gauges were there. So which can be used to measure. Thank God they are giving this information. If at all they don't give this information, what is steel silo, all that, it will be very difficult. So measuring strain gauges, strain depending upon, strain means it actually measures the, pressure in that container. Big containers, they are very big containers. The containers capacities will be like 1 ton, 2 tons containers. Steel silos, they'll have 1 ton, 2 ton capacities. So they'll have measuring strain gauges will be there. With that you can measure how much quantity of paddy or rice is stored in that silo. Getting it? Fine. So that is used for measuring it. And paddy is contained in jute bags. It is stored in heaps on pallets. Okay, so it is just kept on, bags, bag on bag like that in the wooden structures. Fine. The company mainly produces 3 rice bands. So they purchase paddy and process it convert it into rice and then pack it in the rice bags and then sell it. Raja brand, Shenzada, Badshah. Okay, so one is for domestic market and another for international market. The process of obtaining rice from paddy consists of various steps like cleaning the paddy, removing outer husk layer, and getting it to obtain brown rice, whitening, polishing, grading, sorting, packing, which is accomplished by means of various types of machines. It's like a rice mill, nothing but. The company's management has prepared a set of instructions and procedures to be followed for recording and controlling results of the company physical inventory, which are listed as under. Fine. This is actual question, I think. The company management has prepared a set of instructions and procedures to be followed for recording and controlling results of the physical inventory counting, which are listed as below. So the management is doing physical verification activity, and what are the instructions they are giving to their staff? They are giving. The physical inventory count process is to be supervised by responsible officer of a company responsible for storage functions. That's wrong. Segregation of duty must be there. Division of duty. How can a same store manager be there for verifying the rice, physical quantity? Because he is the one who is maintaining the store. He should not be given. Of course, he should be present. But physical verification count, whoever is performing, no, somebody should observe, not from the warehouse department, from some other department, he should come and verify. Purchase department also not permitted. Accounts department, of course, they are dealing with accounts. Probably a finance department person or maybe internal auditors of the company might attend. Some management persons must attend, not belonging to warehouse. Next, there should be no disturbance as to routine process of receiving goods and dispatch during the count time period. This is actually mixed opinion. You know, I have seen one guidance note where in the guidance note they say when we are doing physical inventory counting, we have to stop the business. Like we should stop receiving and dispatching everything and do a physical count, then match it with the records, do reconcile, then again resume the operations. This is what one of the guidance note recommendatory provision. But nowadays in the modern businesses, no, perpetual inventory is being followed. So in spite of running the business also they are doing. So this is a mixed opinion. My next, counting process is to be undertaken by consulting different teams of 3 members each for counting or verifying raw materials, work in progress and finished goods. So for raw materials one team, work in progress another team, finished goods another team. Okay, actually they are even having rice bags also, right? We'll see. Paddy in steel silos is to be measured using their capacity. Steel silo capacity, based on that you have to measure. Wrong. It has the gauges. Yes or no? Strain gauges. Strain gauges. This itself is a scientific. This is actually a mission. This is a mission. For the steel silo itself, the mission will be attached. So using these gauges, we can measure. You know, based on the silo capacity, you can't measure. Strain gauge capacity you must use. Fine. Quantity of work in progress is to be estimated considering plant capacity as a whole. A work in progress, no, how we will measure based on stage of percentage of completion. Stage of completion is the basis for valuation of work in progress, right? Measurement of work in progress, right? How do you take based on plant capacity? A company may be using full capacity of the machinery or may not be using full capacity of the entire factory. The responsible officer should ensure that stocks have been counted or verified in all areas. This is actually correct. In all areas, we should verify. Fine. First of all, what question they're asking, we'll see. Before proceeding to attend physical verification, you are a stat auditor, you want to attend the physical verification count, evaluate management's instructions and procedures sent to, you know, the CA. Careful as stated above. You may also suggest modifications, additions, or removal of such instructions to ensure effective. So, what are the, you know, you remember 501? When, 501, the auditor must obtain sufficient appropriate evidence regarding existence and condition of inventory by attending physical inventory counting at year end. When the auditor is attending physical inventory counting at year end, he should observe the following. Look at the first. Observe the, look at the management's instructions for the count procedures. Test check the inventory, inspect the inventory, reconcile it with the records. Yes or no? These are the 4 points which are there. Now, in the given case, the auditor have identified, in the given case, management has given certain instructions. Inside that, the following modifications can be made. Think logically. The actual answer given is so lengthy, that and all we can't even imagine. But based on this, if you write 5 points, that's more than enough. Based on this, if you're able to give 5 suggestions, that's more than enough. One of the suggestion is storage function person. He should not be responsible. The person responsible for storage function should not be the person who is observing the physical count process. He should also be present, but some other department person who is not having any link with the storage functions should be kept for observing. Preferably finance people or internal auditor, somebody can come. There should be no disturbance. As per guidance note, it is an advisory. It is recommended that physical, movement in the inventory should be halted, either receiving or dispatching at the time of counting for a better grip on the count procedures. 3. Paddy in steel silos is to be estimated based on use capacity. This instruction is wrong. Paddy in the steel silos should be estimated using strain gauges, which is a more scientific way of measuring the rice quantity or paddy quantity in the steel silos. Quantity of work in progress is to be estimated using plant capacity. That is wrong. Quantity of work in progress should be estimated based on stage of completion at each stage. Four points I've given already. And you see, generally, moving inventory. Generally, whenever inventory counting is done, obsolete damaged inventory, we should pay attention. That point they didn't highlight here. So auditor should also request management to pay attention. Auditor should also ensure that the instruction cover absolute and all these goods. You see 5 points I got? Enough. Answer is over. Look at the answer, actual answer which they have given. The set of instructions and procedure given in the case scenario are incomplete and not properly followed, which are discussed as under. The physical inventory count process should be supervised by a responsible officer of the company, preferably from finance. Actually, the answer is preferably from any department other than storage functions. The supervision of count process should not be done by the same person who is responsible for storage. However, storage in charge can present at the time of verification. Inward and outward movement of inventory should not be allowed, as allowing such movement may distort the results or make it difficult to arrive proper results. The paddy in steel silos should be determined using measuring strain gauges on the silos, which is scientific. Determining quantity based on capacity may lead to wrong result. I think this point we covered. Quantities of working progress should be estimated at each stage of production, not based on the plant capacity. Estimating WIP for a plant as a whole give an inaccurate picture. Finished good inventories need to be counted category wise. Yes or no? Because rice bags are also there. 3 categories of rice bags were there. And there is no instruction. Management has not covered instruction regarding damage or absolute good. So we should cover. Count sheet should be signed by each team member, because like management is sending different teams. They should have a count sheet. You remember, even the count sheet should have a format. So what is the format of count sheet? What format they need to record the physical inventory, all that, the counting procedures, that also I think, that is what I think somewhere everywhere. The management count sheet should contain description of products in accordance with inventory records. Count sheets will be there. If at all you are doing any physical verification, first count sheet will be given. Like what are all the products that are there in the go down? So count sheet will be given. Now you just have to rack number 1, rack number 2, rack number 3, how many were there? Like this, you just have to number it. Physically see and number it. The management instructions are silent about how team members will proceed with the work. Team members should be provided with the layout of the plans of different sections of storage areas. So this and all out of box, you can't even think. So that's why based on the given answer, try to identify whatever answer that you can develop. So I think 4 points, I think we concretely developed. 1 point regarding obsolete goods and all. That you write. See, better what you do is give a single reading of this entire answer. Whatever physical verification question comes, if at all, it may not be rice related industry, it may be some other industry also they may ask. Same points you can write. Just that you replace with the word rice with some other product, mostly same points you can write. I think this answer itself is a guiding answer for us to answer all types of physical verification of inventory, even physical verification of fixed assets also. Next. So this is one out of box question. While conducting audit of CGX Limited, a listed company for the year ended 22-23, CS Risti notices that company has extinguished the following material liabilities unilaterally without entering into settlement with the creditors and reported these amounts as gains under other incomes. Oh, the company wrote off payable amounts. Trade payables, no, they wrote off. Wrote off trade payables means what? That to remember, it's unilaterally, means without the consent of the creditor. Creditor did not waive. The company only wrote off. Why they wrote off? Liabilities for purchase of raw material were written back because of on account of poor quality and difference in the rates. 3.5 crore worth of raw material was wrote off because of the poor quality. Liabilities for capital goods were written off because of the defect in the machinery worth of 2 crores. Totally 5.5 crore worth of goods wrote off either because of the defect or because of the poor quality. The management is of the opinion that these dues are no longer payable. Therefore, retaining these liabilities on the financial statements will lead to overstatement of liability. Extinguishment of liabilities was made by the company in accordance with normal trade practices, and outstandings were written back after stopping dealing with such creditor. She wanted to send. Okay. She means probably the auditor. The auditor wanted to send external confirmation request to such creditor. However, management informed her that sending such confirmation may be used by creditor as a proof of existence of liability. She is contemplating inclusion of the above matter under key audit matter, analyze the situation threadbare, in detail analyze. See, actually she did a unilateral, the company did a unilateral act of writing back the liabilities, which is also normal industry practice. Fine, company gave all this explanation. I also want to confirm with the third party by asking him whether the company wrote off actually you're not dealing. So we just want to know whether third party is still wanting to receive the money or okay, left the money, waived the liability. We just want to know. For that, company does not permit. Saying, sir, if you send a confirmation, third party will show this as a proof of liability and will try to sue us in the court of law. So companies, restricting the auditor. I feel the reason which company is giving is not correct, because if he unilaterally wrote back means third party also would have agreed, right? Probably would have agreed. Informally some communication would have been happened, right? Yes or no? So third party should waive the liability. Only then you can, until third party actually waives the liability, it's a liability present. A liability can be discharged only by actual payment, or maybe if third party agreed that defects and all agreed, if at all he take back the machine capital goods and he will replace it. You know, in Ind AS and all, they have given Ind AS related answer. You see here, a liability is a present obligation. Okay, a liability, you know, a liability can be, instead of fulfilling an obligation, settle the obligation by negotiating release from the obligation. Means third party should waive, transfer of the obligation to some other people, replace that obligation with a new obligation. Oh, a liability can be settled with any of these three methods. One method is actually you pay, clear the liability. Apart from that, get a waiver from the third party or transfer this liability to some other party. 3. This obligation you have, right? Replace this with another obligation. Nothing but you send me defective goods and take back and give me new proper goods. Only in these three ways the liability can be settled. Here you see, the entity has an obligation to transfer resource until it has settled. It's actually completely Ind AS language. Okay, in the above situation, entity has obligation to transfer economic resource until it has settled, or until it is transferred, or until it is replaced. In the given case, the company written back liability due to the creditors unilaterally. The company has not settled the obligation by negotiating a release. Means the creditor did not waive. Such an accounting treatment is questionable and again is the Ind AS. So CS Rishti want to send external confirmation, but management informed that this is not possible. She should display professional skepticism and be alert to the possibility of misstatements. If restrained by the management, okay, the reasons do not appear to be valid, she should assess the risk and perform alternative procedure to get evidence and all. If at all she is unable to get evidence, give a modified opinion. So entire 705. Since you have to give a modified opinion, can you highlight this under key audit matter? Not at all proper. Modified key audit matter is not a substitute for modified opinion. Read this entire answer once. You need not write this much depth, ma. You just briefly read whatever answer is given here. Summary if you write, that's enough in the exam. Next. FAB Limited is availing services of Atia Private Limited for its payroll operations. Okay. Service organization. Payroll cost accounts 63% of the total cost of our company FAB Limited. Atia Limited has provided type 2 report as specified under 402 for its description, design, operating effectiveness of controls. Okay, we got 402 report. Atia Private Limited has also outsourced a material part of payroll operations to Messrs RST Associates in such a way that Messrs RST Associates is sub-service organization to FAB. Appa, sub-service organization related discussion. Actually, it is not given in the ICA book also. Sub-service organization discussion was not given in ICA book. When I read this question for the first time, I was shocked. How come you ask sub-service organization question which is not there in the material itself? But when I see the last part of the answer, I understood what actual question they're asking. Comment whether CA Akram is correct in removing the reference to the work done by service auditor in the audit report. Oh, they are asking about reference to service auditor's report in the main auditor's report, in our user auditor report, not actually this question. Fine, look at this actual question. The type 2 report which was provided by Atira, means service organization, was based on carve out method as specified in 402. Carve out method and all they are using. We normally discuss auditing standards already in depth. Now, if at all I have to discuss carve in method, carve out method, which is international framework language. Getting it? We don't use this carve out, carve in. Probably in India you will be using, but in normal auditing standard we never use this. Carve out method means if service organization, when they are giving description, design and operating effectiveness of services, no, and they are using sub-service organization, right? Sub-service organization controls and also they will describe in that report. If so, that's a carve in method. If sub-service organization related information is not given, that's a carve out method. That's what actually the meaning. CA Akram, while reviewing the unmodified report drafted by his assistant, found that a reference has been made to the work done by service auditor. Okay, he is giving unmodified opinion, remember. And service auditor reference was given in the same audit report which contains unmodified opinion. CA Akram hence asked his assistant to remove the reference and modify the report accordingly. Means, hey, remove the reference, give an audit report with unmodified opinion. So please change the report, give modifications to the report. Modify the report means not qualified opinion, don't misinterpret. His assistant, no, my article, no, he included service auditor name. Hey, please remove this name and modify the report and then give me that word, that modification here. Getting it? So generally, if you look at 402 reporting requirement, if at all, because after using service auditor report, you want to say that internal financial controls or some controls are not operating effectively, to communicate the impact of the modification, you can use service auditor's referral. But here you give unmodified opinion. When an auditor has given unmodified opinion, user auditor has given unmodified opinion on the user entity, there is no necessity to refer about the service auditor. That is the answer. The user auditor shall not refer to work of service auditor in an auditor report containing unmodified opinion unless law is mandatory. If such a reference is required by law, the user auditor shall also indicate that reference does not reduce the responsibility of service user auditor. Thus, in view of the above, CA Akram in removing the reference is in order as per the standard. User auditor cannot refer to the work done by service auditor, especially when he is giving unmodified opinion in this context. First question is over. Second question. TBX & Co., a chartered accountant, is a large audit firm. It maintains audit documentation both electronically and physical form, hard files. The physical files are neither scanned nor incorporated into electronic files nor cross-referenced to electronic files. Okay, so physical documentation is there and electronic. Further, there are many incidents where audit working papers do not contain details as to whether information was obtained from client or prepared by the engagement. This is very important. Whenever you are documenting anything, whether electronic or physical, you have to document whether this information is provided by the client or it is working made by our engagement team. You should clearly document. Further, most of the physical documentation, whatever is there, we should scan it, image processing. We should scan it and then keep an electronic version also. That's a guidance note. That's a guidance note related requirement. How do you view the above situation from the point of view of audit? This is actually there in pronouncement book, in-depth explanation, 230 related question. Actually, this question is from 230. Even this discussion is not there in CA Inter also. So one part of the answer is the auditor must maintain documentation, information, who prepared this information. Is it obtained from the client or is it prepared by the engagement team? That information is must. And whatever electronic papers were there, whatever physical papers were there, right, we should scan it and then maintain. We should give a reference to the physical files to electronic files. We should have a reference. We all did that work. Fine, anyhow, just read the answer. It's a very easy question only, generalized question. B, this is regarding digital audit question. IT dependencies. Why it is important to identify IT dependencies to develop an effective and efficient audit approach? What do you mean by IT dependencies? IT dependencies generally arise when we are initiating or recording a transaction using manual processes. In a technology environment, we are using manual processes for initiating or recording. That's called IT dependency. System generated reports, interfaces, and automated controls. Like that, some 4 or 5 options were there. You just have to give 2 points. So they have given system generated report, interface, digital audit question. But I think most of you would have not seen digital audit, even if you have read it. So lengthy chapter, so high, and even if you read this question, it is very difficult for you to sync with the actual read, whatever you read. That's why I tell people to leave digital audit. If at all you're targeting 80 marks of this paper, that's more than enough. You can happily secure 50 plus. CA Gyan is a chartered accountant in practice and also an engineer by qualification. He wants to pursue a registered valuer course and works as a registered valuer. This is an out of box question. Registered valuer for plant and machinery under the Companies Act. It's completely wrong. In Companies Act, we have registered valuer rules. As per the rules, valuation rules, registered value rules, you can do valuation of any asset, financial assets, securities, but not immovable property, plant and machinery. Plant and machinery valuation, you are not permitted. A registered valuer is prohibited to do valuation of plant and machinery. A registered valuer is prohibited to do valuation of immovable property. You're only permitted to do valuation for shares and securities and financial assets. That's only permitted. This is completely out of box. Point is not at all there in the entire ICA material. This is asked based on general knowledge. I think the new scheme, the reason why ICA has brought new scheme, where they clearly emphasized the highlight. Those who really did articles, those who really had exposure to many industries, understand the works, understand how everything works. That is what integrated in that is a main seeding. That is a main seeding factor for the new scheme. And they're showing it now. In all these questions of descriptive that until now, whatever we solved, we understood that how practically the ICA is testing. So not, if you mug up the content, you cannot sustain this exam. Getting it? But if you conceptually understand to some extent, whatever the level of practicality, you can answer. You can read the question, negotiate the analysis, and somehow you can answer. So common with reference to provisions of CA Act. A CA, obviously, he wants to pursue registered valuer course. When you're doing, you remember clause number 11, automatic general permission, where you are permitted to pay coaching, where you are permitted to take coaching and exams of anybody. You are happily permitted. No problem at all. And you can be registered value. You can be registered value, but not for plant and machinery. That is not permitted. You read the answer, they have given a clear explanation, but there also it is not completely clear. So when I read this question, because I know registered values are not permitted to do plant and machinery valuation, I personally, because I've seen in practice. Getting it? I know, but a student definitely cannot figure out unless you have seen this. So this is an out of box question. 3A. This is also straight out of box question. Let's see. Jagadish is engaged in real estate business. This is not actually out of box question. This is a straight question. This is a straight question. Essay 540, we straight away have a question. This is a 540 question, re-estimation related question. If you open our book, Essay 540, last box, second question in our book. So I have explained in the classroom also, same question as it is copy pasted. So real estate. So there is some accounting estimates. Getting it? Re-estimation. So prior period already management has estimated. Now auditor want to re-estimate those estimates, and management is saying it's prior period estimate, you can't re-estimate. So regarding that, we have a straight question. Real estate question only we have in our book also. Same question copy pasted. You just go through it. RML Associates are one of the joint auditors of IND Bank. Joint auditors of IND Bank for the year ended 22-23. While auditing IND Bank, this is actually out of box question. Straight out of box question. Fine. While auditing IND Bank, they analyzing industry data relating to NPAs in the public sector banks as part of risk assessment. Okay. Name of the bank, gross NPA, net NPA, ratio of net NPA to net advances. First of all, what is a gross NPA? What is a net NPA? No information is there in our bank audit chapter at all. Fine. Look at the question what they're asking. In the above context, what do you understand by the term gross NPA, net NPA as on the reporting date in the context of financial statements of a bank? As an auditor of this bank, what inference would you draw by comparing the ratio of net NPAs to net advances with other public sector banks? So IND Bank, 4% is there. Remaining banks ratio is this. So IND Bank is having higher net NPA ratio. And first of all, what is the gross NPA, net NPA? Gross NPA means before creating provision. Net NPA means what is the gross value of NPA minus provision is equal to net NPA. That's the main difference between gross NPA and net NPA. Provision on the advances, whatever provision you created for NPA as per provisioning norms, prudential provisioning norms. After that, whatever balance amount is that is called net NPA. Because net NPA is something actual loss bank ultimately suffers, ultimately debits to profit and loss account. Gross NPA means, of course, this is also a loss to a bank, but provision is already maintained. That's what they'll give you. So gross NPAs represent opening balance of NPAs has increased by fresh NPAs during the year, reduced by any upgradations, means no provision is considered. Whereas net NPAs are arrived after reducing the provisions held against NPAs, balance in interest suspense account to park accrued interest on NPA. Very simple. Gross NPA minus provisions is equal to net NPA. That's it. The net NPA to net advance ratio is higher in case of IND Bank as compared to other banks. So this indicates that there is a high risk that bank may not have made proper provisions as per RBI guidelines. If net NPA ratio, net provisioning ratio to net NPA ratio, if it is higher, it indicates that company have created lesser provision. A higher net NPAs to net advance ratio indicate that probability and risk of under provisioning. Keeping in view, you have to tailor your procedures. You have to do more in-depth audit regarding provisions audit. This entire discussion is out of box. Out of box. I'm talking from student point of view. Next. Mr. Mayank, a chartered accountant, was auditor of Chu Limited for the year 21-22 and 22-23. So you are the auditor of so-and-so company for 2 years. During the financial year, the investment appeared in the balance sheet of company amounting to 7.5 lakh and was the same in the last year. The same amount of investment is reflected in last year and current year. Later, it was found that company investment was only actual 56,000. Oh, actual investment value 56, but 7.5 was there in the balance sheet. You certified the last year balance sheet. You are also certifying the current year balance sheet. Means without verifying the evidence, you are certifying. Clause number 2, part number 1. Schedule number 2 violation, and you are certifying without verifying anything. It amounts to gross negligence. It amounts to gross negligence. The value of investment was inflated for the purpose of obtaining higher bank loan. Oh, it is the bank, they have inflated common with reference to Chartered Accountants Act and schedules there too. So 1, if at all you are certifying or submitting, any report, financial statement, unless you examine the statement and related records, so you are guilty and gross negligent, and you fail to obtain sufficient appropriate evidence, and you express your opinion without that. Clause number 8 also. Generally, I told you when I'm explaining ethics also, generally schedule 2 will have interlinked classes. Whenever they are testing schedule 2 part 1, no, there is a possibility that multiple classes will appear. So when you're writing the answer, when you think multiple clauses comes, all the clauses you write, no problem. So here you have to do physical verification and valuation of inventory. Of course, it's management. You should verify whether the valuation and existence is proper, whether the investments are existing, whether the valuation is proper. You should verify. The auditor should verify documentary evidence and cost and value of the inventory at the end of the year. He should not blindly rely upon management representation. In the instant case, such non-verification happened for 2 years. It also appears that you failed to confirm the value from any proper source. So he simply relied upon management judgment. So you're grossly negligent, you're guilty under clause number 2, clause number 7, clause number 8. Next. 4. This is somewhat again normal question. I think so. One question. This is out of box bank audit related question, and registered value question out of box. SQC is common. 402 is also common. 505 is also okay. If you're logically good, you can. This is also little out of box. I felt totally 15 marks. Till now I felt out of box. Remaining also we'll see. The audit report of Rare Private Limited for the year 22-23 was issued by SRM & Co. on 23rd July 2023. Okay. However, a case has been filed against the company on 9th August with a civil court with respect to an incident caused in the factory on 24th January. So, condition existing on balance sheet date 9th August, a case has been filed. The future outcome of which may result into paying heavy penalties, which was informed to Rishabh Pandey, the partner. Okay. So, a case has been filed where company has to pay huge penalties. Rishabh discussed the said matter with the management. You remember subsequent event? Generally, after the date of audit report, auditor will not have any duty to perform any audit procedure. However, if any fact came to the knowledge of the auditor after the date of audit report that requires the auditor to amend the audit report, the auditor discuss the management, see whether financial statements requires amendments, and ask the company how they are going to amend it. Here, condition already there on the balance sheet, subsequent litigation, it gives an indication that financial statement require amendment. They should disclose it. So, Rishabh discussed the matter with the management, and it was determined to amend the financials for the year 22-23. Okay, company agreed, happy. Mr. Rishabh inquired how management intends to address the said matter in the financial statements, to which he was told said matter was going to be disclosed as contingent liability for a court case to the footnote in the balance sheet with no additional disclosure. The management told Rishabh that such disclosure was enough as he would be further going to provide description in the emphasis of matter paragraph in the new audit report, amended audit report. In this context, please answer to the following. Whether Rishabh, on behalf of SRM & Co. has properly adhered to the SA 560 responsibility? Absolutely. The moment he came across after the date of audit report, he discussed with the management. He checked whether financial statement require amendments, and management also agreed. He asked the management how they are going to amend. Management told him whether contention of the management is valid with respect to disclosure of the court case in the financial statements. The management has to disclose in depth. Probably, maybe not as a footnote, they may have to disclose it. And of course, the auditor is highlighting it. So look at it. Second question. So what, by the way, look at it. What management? The management told Mr. Rishabh that such disclosure was enough. So contingent liability as the, sorry, just a minute. The management told Mr. Rajesh that such disclosure as a footnote is enough. They have to disclose in-depth disclosure. What management told you see? The management told Mr. Rishabh that such disclosure was enough, as he would be further going to provide description of the court case and its outcome in the emphasis of matter paragraph in the report. So logically framed. When you read for the first time, you don't understand. You have to be very careful. The company is just disclosing as a footnote. That's wrong. The company has to do an in-depth disclosure. Why company is disclosing as a footnote? Because company is feeling anyhow Rishabh is going to provide disclosure in-depth in emphasis of matter paragraph. Wrong. Emphasis of matter paragraph is not a substitute for modified opinion. Emphasis of matter paragraph is not a substitute for disclosure or presentation of the financial statement. You need to clearly mention that. 706. It is not a substitute, and since the company is not disclosing sufficiently, auditor may have to qualify under 705. I don't know whether qualification point is used or not. I don't know. The emphasis of matter is not a substitute. So The said contention of the company is not valid. The emphasis of matter paragraph cannot be used as a substitute. So management has to give full disclosure. If management did not agree, the auditor will modify his opinion as per 705. He will not be using 706. If at all management to be a full disclosure, yes, auditor can highlight it under 706. Next. 4B. This is regarding business responsibility sustainability SDG related audit. It's not required. CA Navya is statutory auditor of Laksha Limited for the financial year 22-23. In respect of loans and advances 75 lakhs given to Hariharan Private Limited, the company has not furnished any agreement to CA Navya. In the absence of the same, he is unable to verify the terms of repayment, chargeability of interest and other terms. Justify type of the opinion which CA Navya should give in such a situation. Draft an appropriate opinion paragraph and basis for opinion. Very few students mocked me saying, why are you discussing opinion paragraph discussion? This is many times this kind of questions were asked in CA panel, but nobody recognizes. Drafting they are asking. See, 75 lakhs worth of related evidence you did not get. You have to give a qualified opinion. So in our opinion, to the best of our information and according to the explanation given to us, except for the effect of the matter described in basis for qualified opinion section of our report, except for the possible effect of the matter. Here you should write possible effect because you did not get evidence, except for the possible effect of the matter described in basis for qualified opinion. The efforts and financial statements are showing true and fair. Now, basis for qualified opinion. So you need to give a drafting. You need to give a drafting. You need to give. So information is not given. The absence of document tantamount to a material misstatement in the financial statements. However, inability to obtain evidence, material but not pervasive. So, okay, if at all, if it is not pervasive, is actually however, the inability to obtain is though material but not pervasive, so as to require, okay, disclaimer is not required. It is only material but not pervasive. Thus, in the present case, you should give a qualified opinion. The relevant extract is, you should give like this. Except for the effect of the, it is actually not effect of a possible effect. This answer is wrong. Possible effect, because here evidence is not there. And basis would qualify. The company is unable to furnish the loan agreement with respect to so and so. So in the absence of such an agreement, we are unable to verify the terms of repayment. We are saying we don't have evidence. That's why the word is possible effect. The answer itself is wrong actually. It's actually possible effect. In the MTP itself, they gave a wrong answer. But see, they are asking drafting questions also. Naresh and Co, a chartered accountants, have been appointed stat auditor of Suchi Limited for the year 22-23. The audit team has completed the audit and is in the process of preparing audit report. Management of the company has also prepared draft annual report, 720 question. The audit in charge was going through the annual report and observed that the company has included an item in its annual report indicating a downward trend in the market price of key commodities as compared to previous year. However, the actual profit margin of the company was reported the financial was gone in reverse direction. The audit manager discusses the issue with a partner of the firm who in reply said that auditors are not covered with the disclosures by management in annual report. It is responsibility. That's wrong. SA 720, other information. Auditor has to read the other information and try to identify whether any inconsistency between the financial statements and other information. If there is any inconsistency, auditor has to decide where there is a material misstatement. If the material misstatement and other information, request the management to correct it. If management is not correcting it, in the other information section of the audit report, you have to highlight what mistake exactly happened. That's it. So read the answer. B. This is PSU audit. Read this answer on your own. PSU audit, direct benefit transfer. Again, this is out of box question. I feel this is out of box question. C point. GEM portal. People who have the knowledge of GEM portal only they can answer this. Otherwise, they can't answer this because no guidelines at all, no reference to this in our professional ethics chapter. Read this question. GEM is a public procurement portal which provides opportunities to startups, entrepreneurs, etc. to showcase their innovative products and services to government buyers and engage in public procurement. The government e-marketplace special purpose vehicle, a 100% government owned and Section 8 private company under MOC, Ministry of Corporate Affairs, Ministry of Commerce, Government of India has incorporated to develop, manage and maintain GEM platform. Whether a firm of chartered accountants can register on GEM portal for rendering services? Obviously, yes. Yes. Remember, there is some council guidelines. We are not permitted to register an aggregator, third-party aggregator. But this is not a third-party aggregator. This is like an empanelment. This is like an empanelment. A GEM portal where You and me, everyone, every seller of goods, every seller of service provider, if at all you want to sell to government departments any goods, if at all you want to provide services to government department through GEM portal, a government department cannot procure any goods or services outside GEM portal. Only through GEM portal they can procure. So in GEM portal, to whom they can give this contract, government departments and all, only to those who register. So if I have to get a government department related some service and all, some works and all, I have to compulsorily register. See, I can register in GEM portal. I cannot go and call each and every department, give allocate. That I cannot do, but I can register in GEM portal. This will not be an aggregator model. This is permitted. So whether a firm can register on GEM portal? Yes, absolutely. Please read the answer, you will get in-depth clarification, because GEM portal is different. In GEM portal, we create user account and we log in and we post our products and services. And government department, if at all they want to buy, they just search for these products. If at all our products comes in the search list, if at all they like their prices, they will buy from us. When an auditor's report on audited financial statements contain a qualified opinion, but auditor is satisfied that summary financial statements are a fair summary of audited financials in accordance with applied criteria. 8-10 question. Which other matter shall the auditor's report on the summary financials contains in addition to 8-10? In the audit report, if summary financials are not a fair summary in accordance with applied criteria and management does not agree to make necessary changes, what are the implications in the auditor's report on the summary? So one, if it is a fair summary and on the audited financial statements qualified opinion is given, you will give an unqualified opinion on the summary financial statement saying that summary financial statements are a fair summary. In addition to that, since audited financial statements related to audit report contains a qualified opinion, what qualified opinion and all you explain here. Suppose if summary financials are not a fair summary, we straight away give adverse opinion on the summary financials. I have covered in my marathon part 2. You see a final audit marathon part 2, inside that 8-10 and all is clearly explained. In May 24 attempt, part 1, part 2, part 3 marathons were given. In that part 2 marathon, inside that 8-10 time stamp will be there. You just go through that. The initial discussion itself is regarding this. In a review engagement performed under 2400, practitioner relies mainly on the certain procedures. Name such procedures, discuss importance. In a review, what process we perform? Primarily, we do inquiry and analytical procedure. Name those procedures, discuss why they are important. Practitioner's report containing outcome of review in the form of a conclusion also contains a description of review and its limitations. Okay, in ultimate practitioner's report, when we are giving review report ultimately, in that we talk about some limitations and all. A review is not an audit. A review is not an in-depth examination. So accordingly, we deny expression of opinion, disclaimer of opinion. Remember some 2-3 statements and all we have read, that alone. That you have to write. This is again, I feel out of box question. It's an ethical standards board clarification in 2021, which is not covered in our ethics book. In CA final audit book, it is not covered. One illustration is covered. That we are not permitted to do commodity derivatives, but we are permitted to do currency derivatives and equity derivatives. Getting it? We can be equity research and give advices to our relatives, families, friends, and all. We can do advices and all, but we can't, we can't run a management. We can't run a asset management service kind of service. So like that, ethical board clarification is given. CA judge in practice is desirous of filling multi-purpose empanelment form for inclusion of his name in the panel of allotment of stat order of bank branches web hosted by Professional Development Committee of ICA. Okay, you can. The form requires applicants to upload XML files on their personal income tax return along with computation of income. Okay, during the relevant year for which information is being sought by this one. So a Professional Development Committee. Judd has transacted in futures and option derivatives equity and has reflected income from such transaction rate of income. Okay, he can transact equity derivatives, currency derivatives, all that he can transact. Analyze the above situation with reference to, as per ethical standard board guidelines, transacting in derivatives is permitted. Only commodity derivatives is not permitted. I don't know exactly what reason behind that. This is the straight guidelines. Would it make any difference if CA has earned income from currency derivatives and commodity? Currency derivative is permitted, but commodity derivative is not permitted. Commodity derivative is not permitted. As per ethical standard board guidelines, this is out of box question, technically speaking. Commodity derivative question alone we have in our syllabus, but currency derivatives and stock derivatives, whether a CA can practice, whether a CA can do trading, yes, he can do. Without any permission, he can do. General route. Even in the clause number 11 also, they didn't highlight this. This is a forensic audit related question, a straight question. Just go through this. That's it. MTP1 is over. Brief discussion itself takes this much time. So okay, you read carefully once. Go to the exam. If at all a question comes directly, lucky. Just that's why read once, because there's a possibility, since it's a new scheme first time, there is a high possibility that most of the questions will be from the ICA book or from the MTP RTPs only. They will not be testing, to best of my knowledge, new questions. A similar questions they will redesign. That's it. Okay, take care. Go watch MTP2, then RTP.